Hello everyone, welcome to EPK Capital's deep dive video. In this series we analyze one company each day based on the security analysis by Benjamin Graham. Today we are going to talk about Britannia. From the good day biscuit dunked in morning chai to the marigold that's a staple in every pantry, there's a brand that has been a silent participant in the daily lives of millions of Indians for over a century. That brand is Britannia. But behind these familiar packages lies a massive publicly traded company with a rich history and a complex future. Is Britannia a story of unshakable dominance, or is it a giant facing new challenges in a rapidly changing market? In this detailed analysis, we'll peel back the wrapper on Britannia Industries. We'll examine its 10-year financial performance, look at what the stock chart is telling us, apply a classic valuation model, and weigh the arguments for and against investing in the company today. The anatomy of a household name, understanding Britannia corporate blueprint. What is Britannia today? Britannia Industries is an Indian multinational food company, but at its heart, it is a biscuit behemoth. Biscuits are the engine of this company, accounting for approximately 80% of its total revenue. Its portfolio is a who's who of iconic Indian brands, including Good Day, Tiger, Nutri-Choice, Milk Bikis, and Marigold. 5. Beyond biscuits, the company has a significant presence in other bakery and dairy segments. It is the largest brand in India's organized bread market and produces a wide range of cakes and rusks. In recent years, it has made a concerted push into dairy with products like cheese, milk, and yogurt, notably through a joint venture with the French company Bel Group for the Laughing Cow brand. The company's scale is staggering. Its products are available in nearly 5 million retail outlets and reach over half of all Indian households, a testament to one of the most formidable distribution networks in the country. 1. This heavy reliance on a single category, biscuits, is both a source of immense strength and a significant strategic challenge. While this dominance provides unparalleled economies of scale and brand power, it also creates a concentration risk. Any major disruption in the biscuit market could disproportionately affect the entire company. This reality is the driving force behind Britannia's ambition to evolve into a total foods company, making its diversification efforts not just a plan for growth, but a critical strategy for long-term risk mitigation. The custodians of a legacy, the Wadia Group. Britannia is part of the Wadia Group, a respected and diversified Indian business house headed by Chairman Nusli Wadia, who has been at the helm since 1993. This conglomerate has interest in airlines, textiles, and real estate, providing a stable and powerful backing for the food giant. The operational leadership is hail-made by Executive Vice Chairman and AMP, Managing Director, Varun Berry. Appointed in 2013, Mr. Berry is a seasoned professional with deep experience in the consumer goods sector, having worked with giants like PepsiCo and Hindustan Unilever. This combination of a long-standing promoter group and a long-tenured professional MD provides a powerful degree of stability. The promoter holding has remained steady at 50.55%, indicating that the co-owners have significant skin in the game, and a long-term vision. 8. This leadership consistency is a crucial, though often overlooked, asset that enables the execution of multi-year strategies, such as the cost optimization programs and rural expansion plans that have defined its recent success. From Kolkata to the world, a 130-year saga. Britannia's journey is a remarkable story of resilience and innovation. It began in 1892 in a small house in Kolkata with an initial investment of just 295 rupees. The company was a pioneer from its early days. By 1921, it became the first company east of the Suez Canal to use imported industrial gas ovens, a major technological leap at the time. A significant turning point came during World War II, when the British Indian government contracted Britannia to supply vast quantities of service biscuits to the armed forces. This not only boosted sales dramatically but also cemented its reputation for quality and reliability on a national scale. Over the decades, it continued to innovate, launching iconic brands like Marigold and Good Day, which have become deeply woven into the cultural fabric of India. The financial ledger, a decade of performance unpacked. A look at Britannia's financial statements over the last 10 years reveals a story of steady, consistent, and remarkably efficient growth. The top-line trajectory, revenue analysis. Over the past decade, Britannia's sales have shown consistent growth. From approximately 6,913 crore rupees in the fiscal year 2014, the company's revenue has climbed to over 16,500 crore rupees in fiscal year 2024. This represents a compound annual growth rate (CAGR) of around 8.6% to 9.1%. This is not the explosive, high-risk growth of a tech startup, but the dependable, year-on-year expansion of a market leader solidifying its position. The bottom line story: profitability analysis. The more compelling story lies in the company's profitability. While revenue grew steadily, net profit grew at a much faster pace over the same period. This indicates that the company has become significantly more efficient. The key metrics to understand this are the operating profit margin, OPM, and net profit margin, NPM. In simple terms, for every 100 rupees of products Britannia sells, it is keeping more as profit today than it did 10 years ago. This isn't an accident. The engine of this impressive profitability is a deeply ingrained culture of operational efficiency. For 13 consecutive years, Britannia has successfully implemented cost optimization programs that save nearly 2% of its revenue annually. This relentless focus on efficiency, likely driven by its stable long-term management, means that the quality of its earnings is exceptionally high and sustainable. Capital efficiency and financial health. Britannia's financial health is robust. The company has actively worked to reduce its debt over the years. More impressively, it demonstrates exceptional capital efficiency, as measured by return on equity, ROE, and return on capital employed, ROCE. These figures are consistently high, often exceeding 50%. ROE is a measure of how effectively a company uses shareholder money to generate profits, and by this metric, Britannia is among the best in the business. Furthermore, the company maintains a healthy dividend payout ratio of over 80%. The combination of a very high ROE and a high dividend payout reveals a powerful characteristic of the business: it is a cash-generating machine. It produces more cash from its highly efficient operations than it needs for its own growth projects. Rather than letting this cash sit idle or pursuing low-return ventures, the management consistently returns it to shareholders, a hallmark of a mature, blue-chip company focused on shareholder returns. Reading the market's mind. Technical analysis beyond the fundamentals. The stock chart provides a window into market sentiment and price trends. The big picture, the long-term trend. A look at the long-term, 5-10-year, stock price chart for Britannia reveals a clear and consistent rising trend channel. The stock has consistently formed a pattern of higher highs and higher lows, which is a classic technical indicator of sustained, long-term buying interest and investor confidence in the company's growth story. Price levels to watch, support and resistance. Within this long-term trend, there are key price levels to be aware of. The stock is currently testing a support level around the 5,880 rupees mark. Support levels are price points where buying interest has historically been strong enough to prevent the price from falling further. Another crucial long-term level is around 5,176 rupees. This was a previous resistance level that the stock successfully broke through. In technical analysis, old resistance often becomes new support, making this a significant flow for the stock price. On the upside, key resistance levels to watch are around 6,218 rupees and 6,609 rupees and 18 paise. The momentum gauge, Relative Strength Index (RSI). The Relative Strength Index, or RSI, is a momentum indicator that helps determine if a stock is overbought, potentially too expensive, or oversold, potentially too cheap. The 14-day RSI for Britannia is currently hovering around 50.78, which is considered the neutral zone. This suggests that, in the short term, the stock is neither overextended to the upside nor oversold, indicating a state of balanced momentum. The value investing test, applying the Benjamin Graham formula. To assess the stock's valuation from a classic value investing perspective, we can apply the formula developed by Benjamin Graham, the mentor of Warren Buffett and the father of value investing. His formula aims to determine the intrinsic value of a business, separate from its day-to-day stock price fluctuations. Plugging these values in. The calculated intrinsic value of approximately 2,195 rupees is significantly lower than the current market price of around 5,900 rupees. According to this strict, old-school valuation model, the stock appears to be substantially overvalued. However, this result requires careful interpretation. The Graham formula was developed in a different economic era, with different interest rates and market expectations. It is often better suited for traditional, deep-value companies rather than high-quality, consistent growth companies like Britannia. Therefore, rather than a simple sell signal, the formula's result is more useful as a diagnostic tool. It powerfully illustrates the significant premium the market is willing to pay for Britannia's exceptional quality, brand dominance, and consistent performance, factors that a purely quantitative formula from the 1970s may not fully capture. The investor's dilemma, the bull case versus the bear case. This brings us to the central debate surrounding Britannia's stock today. The bull thesis, the argument for optimism. Full circle. A fortress-like moat, Britannia's primary strength is its powerful brand, built over 130 years, combined with its unparalleled distribution network. This creates a formidable competitive advantage, or moat, that is incredibly difficult for competitors to replicate. Full circle. Operational excellence. The company's 13-year track record of saving 2% of revenue through cost efficiencies is proof of a deeply ingrained culture of operational excellence that consistently protects and expands profit margins. Full circle. Strategic agility. The company is not resting on its laurels. Its new, Many Indias, strategy is an intelligent and proactive response to rising regional competition. Instead of engaging in destructive price wars, Britannia is leveraging its brand and manufacturing scale to create localized products that cater to regional tastes. Full circle. Untapped growth levers. There is still a significant runway for growth. The company aims to increase the contribution of rural sales from 40% to 50%, which would tap into a huge and growing market. 14. Furthermore, its success in adjacent categories like croissants and wafers proves its ability to innovate and expand its product portfolio successfully. The bear thesis, the argument for caution. Full circle. The rising tide of regional competition. Britannia's own success in making the biscuit category highly profitable has, ironically, attracted a swarm of nimble, regional competitors. These smaller players can often react more quickly to local trends and present a persistent threat to market share. Full circle. The squeeze on margins. This heightened competitive intensity is putting pressure on profit margins. Analysts have expressed caution, noting that competition could erode the company's profitability despite its cost-saving efforts. Full circle. The high price of quality. The stock's valuation is steep. It trades at a price-to-earnings (P/E) ratio of around 64, significantly higher than the sector average of about 23. This premium valuation means very high expectations are already priced in, leaving little room for error. Any slowdown in growth could trigger a sharp price correction. Full circle. The diversification challenge. The company's leadership has admitted that the journey to becoming a total foods company has been a mixed bag, with dairy and cake categories not meeting initial expectations. 28. The decision to enter consolidation phase and pause new category launches for a year could signal that diversification is proving more difficult and capital intensive than first thought. 14. Critical due diligence. Final checks brand trust under the microscope. A company's reputation is a key asset. In its long history, Britannia has faced challenges. In the 1990s, it went through a dramatic boardroom struggle involving businessman Rajan Pillai, a saga that was resolved long ago. More recently, in 2019, the company was held liable by a consumer forum for a contaminated biscuit, resulting in a fine of 1.5 lakh rupees. While this fine is financially insignificant for a company of Britannia's size, it serves as a reminder that for a food company, quality control is paramount. The primary risk from such an event is reputational, and while this appears to be an isolated incident, any pattern of quality issues would be a material threat to the brand. Britannia on the global stage. While Britannia has a presence in over 60 countries, it is important to contextualize its global standing. It is a dominant domestic champion with a growing international footprint, but it is not a global food giant on the scale of companies like Wilmar International or WH Group. As the table below shows, while its market capitalization is high due to its premium valuation in India, its operational scale in terms of revenue and profit is smaller than that of its major global peers. Concluding analysis. Britannia presents a classic case of a blue-chip incumbent at a crossroads. Its financial history is a textbook example of stability, efficiency, and shareholder-friendly management, all built on the bedrock of immense brand power and an unmatched distribution network. However, this very success has painted a target on its back, attracting a new wave of agile, regional competitors who are challenging its dominance. The central question for any potential investor is whether Britannia's new, localized strategy can fend off these challenges and continue to justify its premium valuation. It is a story of a fortress defending its walls while simultaneously trying to build new towers. This analysis is a starting point. We encourage you to look at the annual reports, listen to the analyst calls, and form your own conclusions. And that's all we had for this video. Thanks for watching. If you found this video valuable, please hit the like button, subscribe to our channel, and let us know in the comments which company you'd like us to analyze next. This video is for educational and informational purposes only and should not be considered as financial or investment advice. All investments involve risk, and you should consult with a qualified financial professional before making any investment decisions.